If you are about to send a freelance quote, pause. In this video, we will calculate a minimum rate from expenses, available hours, unpaid work, buffer, and your reserve, then turn it into one scoped project quote. A common shortcut takes a desired salary and divides it by about 2,000 working hours. That can be dangerously optimistic for a freelancer. It assumes every working hour can be invoiced, ignores business expenses, leaves no room for gaps or overruns, and treats tax withholding as if an employer still handled it. The problem is not the exact number 2,000. The problem is making invisible work equal zero. We will build the rate in 5 visible steps. First, calculate all workable hours. Second, subtract unpaid business time to find billable capacity. Third, add the owner pay goal and annual business expenses, then apply a buffer. Fourth, account for the cash reserve you choose. Fifth, divide that revenue target by billable hours. The answer is an internal planning floor, not a universal market price. Start with expenses your freelance work must carry. For this hypothetical designer, software and subscriptions are $1,200. Insurance is $600. Equipment replacement is $1,200. Accounting, marketing, workspace, training, payment fees, and other costs bring the annual total to $8,000. These are cash planning inputs. Whether a cost is tax deductible depends on location and facts, so the calculator does not decide that for you. Next, remove the fantasy of working every week. The designer plans for 46 working weeks and 35 total business hours each week. 46 times 35 gives 1,610 workable hours. This includes every hour spent running the business, not only client delivery. Holidays, illness, and real breaks must be removed here before the rate calculation pretends those hours are available. Now count the hours clients do not directly pay for: proposals, sales calls, follow-ups, admin, bookkeeping, and learning. The designer estimates 12 unpaid hours each working week. 12 times 46 is 552 unpaid hours. Subtract that from 1,610. The result is 1,058 annual billable hours. Those hours must carry the whole business. The hypothetical owner pay goal is $36,000. Add $8,000 of annual expenses, and the base cash need is $44,000. Now add a 10% buffer for gaps, surprises, and small overruns. 44,000 times 1.1 equals $48,400. A buffer is not profit magic. It is a deliberate assumption that the year will not run perfectly. The next input is a reserve rate chosen by the freelancer. In this example, it is 20%. The workbook divides the buffered cash need by 1 minus the reserve. 48,400 divided by 0.8 gives a revenue target of $60,500. That leaves 20% of revenue in the reserve bucket. This is not a tax calculation. Actual obligations depend on location, business structure, deductions, and other facts. Use qualified local guidance when needed. Now divide $60,500 by 1,058 billable hours. The internal minimum is about $57.18 per hour. If quotes use $5 increments, round up to $60. Rounding down would quietly break the assumptions we just entered. This number says, below here, this exact plan stops fitting. It does not say every client will pay $60. Compare a second hypothetical freelancer. A writer wants $50,000 in owner pay, expects $10,000 in expenses, works 44 weeks at 32 hours, and spends 14 weekly hours on unpaid business work. With a 15% buffer and a 25% reserve, only 792 billable hours carry a $92,000 revenue target. The internal rate is about $116.16, rounded to 120. This is not a recommended writer rate. It shows how fewer billable hours and larger goals change the math. The calculated floor is one decision boundary. It is not a guarantee of clients, demand, or income. It is not a ceiling. A project that creates more value, carries more risk, or requires scarce expertise may support a higher price. A market with weak demand may not support the floor at all. If that happens, change a real driver. Narrow the offer, improve positioning, reduce costs, increase billable capacity, or revise the goal. Do not hide the mismatch by pretending unpaid time disappeared. Now build one quote. The landing page copy project needs 12 billable hours. At $60, the work is $720. Add $100 in one-off project costs. That gives $820. Apply a 10% scope buffer, and the raw quote floor becomes $902. Rounded to a $5 increment, the planning floor is $905. The final price can still move based on value, risk, and fit, but the assumptions are visible. A rate cannot protect a vague project. Write the client outcome, exact deliverables, what is out of scope, included revision rounds, dates, payment timing, and what the client must provide. Add one simple change request rule. If the scope changes, pause and requote the added work before doing it. A quote may become legally binding in some places, so use terms suitable for your location. This worksheet is a planning aid, not a contract or legal advice. The full routine is simple. List expenses, calculate workable hours, subtract unpaid time, add a buffer, enter your own reserve, divide by billable hours, and round up. Then build the project quote and write the scope. The Freelance Minimum Rate Calculator includes the editable workbook, 2 worked examples, the quote worksheet, and a short phone-friendly guide. The link will be in the description. It cannot guarantee income, but it can stop the real costs of freelance work from staying invisible.